My goodness, ladies and gentlemen, what I'm seeing right here is blowing the socks off my freaking feet. Meta stock is up 17% after the bell. We close at $153, up 3% on the day, and now the stock just hit $181 after the bell. We're going to break down Meta in this video, a bunch of stocks, my thoughts on everything. So let's just dive right into it. And mind you guys, I actually didn't even look at the numbers yet. It's 4:40 right now. These numbers just came out and we're going to dive into them right now. I don't even know. I'm at a loss for words right now. So let's just get into it. We saw earnings come in. Let's see if I could even see these earnings, guys. Where the heck are the earnings? Come on, let's locate these earnings, then we'll get into it. We saw earnings. Well, I can see sales, $32.17 billion versus $31.53 billion. EPS came in at $1.76. I'm not sure what the estimate was on that, but who cares? The stock is up 17% after the bell. It's got to be good, right? Let's see here. The Meta CFO sees Q1 revenue of $26 to $28.5 billion, which is above the $27.14 billion estimate. So that's good. The upper end of that range is a good $1.4 billion above the estimate. You can't complain. We can see here Meta's Facebook daily active users were 2 billion, up 4% year over year. Daily active people, 2.96 billion, up 5% year over year. Pretty solid. Then we can see here the family monthly active people was 3.74 billion as of December 31st. That's pretty good. Monthly active users for Facebook were 2.96 billion as of December 31st, an increase of 2% year over year. Not bad considering how many billions of people, guys. The world is only so big. They're not going to be growing at massive clips. So the fact that they're growing 1-2%, I'll take it. That is not bad at all. We can see here if we come up a little bit more, total expenses, they see full year 23 total expenses of 89 and 95 billion versus the 94 to 100 billion prior. That's good. Less expenses, and hopefully they're trying to be more efficient. I mean, I know they are trying to be more efficient with their money, right? Their dollar. Hopefully they can make it stretch farther. So we're seeing that come down, and we already know they're cutting jobs. They've laid off a ton of people. We're not going to get into that in this video. If we come up a little bit more, Meta reports Q4 ad impressions up 23% year over year. Average price per ad down though. So this is actually a very good time for advertisers, right? We're getting at a point where we're in a recession. Things could get worse, right? Ads have come down, the prices of ads. And you want to know how I know that? Is because, well, one of my income sources is ad revenue from YouTube, from these other platforms, and that number's come down a decent amount. So the price per ad's coming down, but ad impressions are up. Interesting, very interesting. I mean, if you're a business right now, think about it. Ad prices are coming down. You want to invest more in marketing. Now's the time to not go in your shell and be scared, oh, the recession's coming out. Of course, if you have the money to do so, now's the time to be a little bit more aggressive and try and gain more market share, at least in my opinion, with ad rates coming down, and they'll probably remain down for a decent amount of time. Meta platforms total costs and expenses were $25.77 billion in Q4, yada yada yada. They guide looks like they guide here, we talked about that revenue already. They announced $40 billion increase, in share repurchase authorization, so they're going to be buying back more shares. And even though they're cutting jobs, guys, they still have their headcount 86,482 headcount, so employees, right? That is unbelievable. So I probably should have dove into, or maybe I'll make another video going into the actual report. I don't want to do that in this video. It'll make the video too long. Maybe tomorrow I'll dive into the actual report where they have all the graphs, make it look all pretty, all the numbers, and we can look deeper into it. But just from that brief glance, they're doing pretty well. They're growing their monthly active users ever so slightly. Not too bad. They beat on revenue. Guidance for the next quarter revenue is solid. This stock went from getting slashed 40% after the last earnings, or maybe not 40%. That was Snapchat. Snapchat 2 earnings in a row of a 40% drop. But last quarter, Meta reported, and their stock went from 140 or 35 rather, all the way down to $88 in the span of a couple days. And the day that they reported, the stock went down within 24 hours of them reporting, the stock went down 30%. So we're seeing that work in reverse. And this is actually a very good lesson, guys, because when we see stocks out there report earnings, they get crushed, 40% drop here, 20% drop there, you're going to feel discouraged, especially if you're in the stock, and you're going to think all it does is go down. And sure, companies that are they're going to go bankrupt, all they will do is go down. If it's a crap company, I mean, eventually all it's going to do is go down and go bankrupt. But if it's a solid company and we see a couple quarters where the stock tanks, right, that could work in reverse. You got to realize that. The crazy down moves could turn to crazy up moves one day in the future. Not for sure, not guaranteed, but I mean, this is a perfect example of that. We had Meta dropped 30% last report, and there was other reports before that where they got hit as well and the stock got destroyed. Now we're seeing the opposite happen. Now it's breaking out and it's at a multi-month high, and it's insane. Now I don't even know how up I am on the position percentage-wise. I mean, this is one that I was buying the dip on. I was buying under $100, and I think I got my average cost down to like 135 or something like that. Yeah, like 130, 135. So whatever that is, guys, should I lock that gain in? What do you guys think? 30%, 30, 35%? It's looking a little juicy here after the bell. I don't know. I'm probably not going to lock it in, guys. But, it's a longer-term hold. But it's always tempting when it goes up so much in a short amount of time. But we'll see. I might make a video on that tomorrow and, again, go deeper into the actual report from them. We'll talk more about it. Maybe make a 15, 20-minute video on it instead of trying to cram everything in to this video, because we have more to talk about in this video, and I'm actually getting really thirsty. Where the heck is my water, guys? Hold on. Let me put my camera down 1 second. Oh, it's not back there. Either way, whatever. We'll talk. I'll get through it. Don't worry. Actually, let me get a little sip of coffee, even though this is dehydrating. Whatever. It's all good, guys. But yeah, what a freaking move. I was not expecting that. I'm not going to lie. I was not expecting that. I opened my phone to check how the stock was doing because I know they reported earnings, and I saw that, and I was like, oh, man, I just came right in the office and literally started filming. So, and here we are. So, Peloton is another one that went ballistic today, 26%. And you guys know my hate. I don't want to say hate. I mean, I don't really hate anybody or anything. Hate's a strong word. I don't like really saying I hate this or hate that. But I strongly dislike Peloton. There's a couple companies out there that I just think suck. Peloton, Beyond Meat, we've talked about. We're not going to get into that in this video. And my dog's here distracting me. But Peloton is one that I was very vocal about, during the pandemic, where it was in a very obvious bubble. And I'm not some genius for pointing this out. I mean, it wasn't anything crazy and hard to believe. I mean, look, Peloton hit $170 during the pandemic. Unbelievable. It was obvious that it was a bubble, especially if you understand fitness, the space, gyms, stuff like that, which I think I have a decent understanding of. I've been going and, being physically active my entire life, going to the gym for, years at this point. And I knew, and you guys probably knew as well, that people were not going to buy overpriced bikes when gyms opened up again. That was the whole idea. And I should have shorted the stock because, man, I would have made a killing if I shorted the stock. But I didn't. And here we are. And this is one that, like Meta, where it had crazy drops, now it's working in reverse because I don't think it's going to go out of business per se. I think they'll eventually get bought out. That's what I think. I think an Amazon or an Apple or one of these tech companies, they're just going to gobble up Peloton. But at this point, it got so low. I mean, to $6-7. And again, I don't think it's going bankrupt. At some point, we're going to see a huge run up and, a huge overreaction to something, or not overreaction, but a huge rip to the upside, just like we saw, irrational moves to the downside at times. Even though I do believe the stock fundamentally should be, low, I don't think it's a very valuable company, but that's neither here nor there. Let's see what they ended up doing, guys. Live news tab, and they reported in the morning. I should have covered them earlier, but we're covering them now. Peloton ended up doing EPS of negative 98 cents, so they missed on that. The estimate was negative 64 estimated, so missed on EPS, but they did beat on sales, which for Peloton, that's what investors are really focusing on, growth. Not so much profitability. They did $792.7 million in sales versus $710 estimated, so they beat that by over $80 million. That's pretty solid. And let's see here. I mean, look at this. Oh, proof's in the pudding, guys. Connected fitness products revenue came in at $381 million, down 52% year over year. Connected fitness products down 52% year over year. And think about it, guys. The whole idea with the Peloton was you have the screen in front of you. It's like an iPad, a glorified iPad, and essentially you're taking classes with other people. There's an instructor, or maybe not forget, but you're involved with other people. And guess what? People are not doing that anymore. They're not as interested. It's common sense. And the stock got destroyed. The business got destroyed. But who knows? Maybe now they're starting to turn it around. I don't know. I'm not hating on them to the point where I want them to go out of business. I just don't think they're going to do well. That's just me. I think they're pretty overpriced. Sure, they're more for the upper end market, people that have a high net worth for sure. That's the target audience. But I feel like everybody that wanted one that has a lot of money already has a Peloton. I don't know. That's my thought. What do you guys think? Let me know your thoughts in the comments. We can see here connected fitness subscriptions, Q2 and connected fitness subscriptions rose 10%. So what dropped 50? Wait a second. What dropped 52%? This says here connected fitness products revenue down 52%. I got to look deeper into that. I'm getting confused now. Either way, guys, looks like here they see Q3 revenue of $690 to $715 million. That's down 11 to 27%. That's not good. Excuse me, guys. Let's see. Peloton says near-term demand for connected fitness hardware is likely to remain challenged. No kidding. It doesn't take a rocket scientist to tell you that. So Peloton right now, I'm not looking at it as an investment, obviously, as you guys probably, you got that from the tone of how I'm talking right now. But I'd consider it as a trade, maybe. If this thing were to cool off a little bit, let's say the dust were to settle, maybe it drops a couple bucks, couple percentage points, actually more than just a couple. Geez, it's got to cool off a ton for me to consider it. If it were to come down, though, let's say $13, $14, right in this little window right here, maybe we could, see if it, buyers come in and respect the dip. And, maybe the momentum would continue from there. But we're not seeing a pullback yet. It went 26% in the green today, guys. I'm being very careful. We also had Altria report. I'm not sure if all of you guys know what Altria is, Altria Group. It's a tobacco company, right? Tobacco company. They sell a bunch of products. You guys can use your imagination. I don't know if I could get demonetized for saying that. I don't really even care at this point. Whatever. But Altria is one that I actually used to own. I haven't owned it in a couple of years. I kind of stopped, and I've mentioned this on the channel before. I'm not going to dive fully into it right now. But a couple of years ago, I was more of I do have a dividend portfolio now, which is really not that big in perspective to my other portfolios. But I used to be more in dividend stocks, a couple years ago. And Altria is one that I was in that was paying a ton. I think it still pays 5-6%. And I was just reinvesting in dividends. But then I kind of shifted a little bit away from dividends. And the main reason was just because they're kind of tax inefficient, to be honest. Think about it, guys. If a company pays a dividend to you, you have to pay taxes on that dividend, and they already pay the company paid taxes on the dividend. So there's double taxation going on at that point. Whereas a company like Meta that is not paying dividends, they keep their earnings, they reinvest these earnings, they're not paying taxes on that. And I'm not paying taxes because they're not distributing me a dividend, So I kind of went away from that in a sense. I'm not saying it's bad. And really, let me say this. If you have a Roth IRA, by all means, dividends, they're awesome because you're not paying any taxes on the dividends and you can reinvest and not pay any taxes at all. That's fantastic. If you're in a taxable brokerage account, though, you got to consider what I just said. You have to realize that there's double taxation going on and, it might not be the best for you. It depends on what part of your life you're in. I'm in my mid, 20s at this point. And hey, if I'm looking to invest for the longer term, I'm increasing my income and things like that, I don't really need, especially that, because I don't need the dividends now. I don't need to invest in dividends. That's kind of what I'm getting at. So I'm focusing on nowadays more on companies that, don't pay dividend. It's not like if a company pays a dividend, I avoid it, but I'd much prefer buying, companies that are growing a little bit more, reinvesting their earnings, not paying a dividend, things like that. So Altria just reported earnings. Let me pull it up and see here. They reported in the morning, right? They ended up doing, let's see here, where the heck are they? Adjusted EPS of $1.18, revenue of 2.69 billion. Or is that wrong? I might have read that wrong. Where the heck is the revenue here, guys? That's the only crappy thing about the live news tab sometimes. Looks like they announced a $1 billion share buyback program. Now they see full year adjusted EPS of $4.98 to $5.13. The estimate was $5.04. So I don't really want to dive too deep into these numbers, but the chart here looks pretty decent. There's no doubt about it. The chart's been the stock's been uptrending since June, July. You guys can see that. And recently we ended up popping over the moving averages. In fact, that was today. The stock went up over 5% on the day. And it looks like now we're making a move towards $50 potentially. So I think there could be more legs on this stock. Maybe towards 50, maybe even higher than that. We also had Waste Management, guys, which actually, did they even report yet? Are they tomorrow? I might have got that wrong. No, they were today. Let's see. Why are the numbers not showing? ThinkOrSwim is messing with me today, guys. No, they were in the morning. Yeah, it looks like they did EPS of $1.30 versus $1.41. They missed on that. Revenue came in at $4.93 billion versus $4.97 billion. So they missed on that. Double miss for Waste Management, and not anything on guidance or anything else important. It says here total company revenue is expected to grow between 4 and 5.5%, which includes organic revenue growth from the collection and disposal business. And you guys know what they dispose of, right? Excluding fuel of roughly 5.5% growth, organic revenue growth. Not too bad. So Waste Management here, the chart's not looking that great. It's in a downtrend, obviously. We're under the moving averages. We're not breaking out of the trend anytime soon by the looks of it. So I'm going to set my alert at 160, and I'll see what it ends up doing from that point. Let me do that now. Mark is at or above $160. So those were the four companies I wanted to talk about. I think Allstate actually reported as well today. Let me pull that up. Let's see here. Allstate does not look that bad chart-wise. I mean, if this thing were to start ripping past, I'd put it at 132 above the moving averages. We could start to see a bigger move from there. The uptrends as of now is clearly holding. We're in this channel that I just drew out. So Allstate ended up doing, let's see, $1.60, or rather they lost $1.36 in EPS, which came in line with the estimate, and revenue came in at $11.48 billion, which beat the $11.43 billion estimate. So mixed bag earnings there from Allstate. I'd look for it above 132, maybe for a move towards 140, maybe even higher. So what a day today, guys. Heck of a day. And if you want to see my analysis of the markets and the Fed press conference, the Q&A, go check out my last video. And I'm not ending this video yet, but if you want to see that, which we're not going to talk about in this video, go check out my last video, which is on the channel. So wild day. I mean, NVIDIA closed over 210 or 209 rather. Look at that. NVIDIA ended up breaking out of 205 like butter. I mean, it ran right through that thing. AMD ended up ripping over $80. I mean, look at that. We filled the gap all the way to 85 now pretty much. Tesla's back over $180 a share. And if you ask me, Tesla looks like it wants to go to 200. I mean, this is just unreal. Adobe starting to start going towards 390, 400, which was the high here from the middle of September. So I'm not going to lie, guys. I am getting awfully tempted to revisit SQQQ. We'll end the video right here. I'm getting awfully tempted to revisit SQQQ, which I bought Friday, sold Monday for a quick profit, because I think these markets are getting a little frothy. Or not frothy per se, but maybe a little hot in the short term. We'll see how tomorrow goes. I'm going to wait and see. A lot of earnings are coming tomorrow, so it's going to be tricky. But maybe we could get a short-term trade on SQQQ. That's what I'm kind of looking at here. Maybe from the mid-30s, maybe a pop back towards 38, 39, collect, 5, 6, 7%. We'll see how it goes. So on that note, I'm going to wrap the video up. If you enjoyed it, of course, hit that like button. Make sure to subscribe. Get up to 15 stocks from Moomoo, each up to $2,000 and up to 12 stocks from Webull with any amount deposited. Link down below. Feel free to check out my Patreon as well. And if you guys want 50% off your first year of Seeking Alpha Premium, all those are linked down below. And just, full disclosure, guys, all those links help out the channel. I appreciate you all. As always, I'll catch you in the next video. Stay safe out there. Peace out.